All right, all right, all right. Hello, everybody. This is Jeremy Wilson, the Forex Trader. Happy Friday. I am super excited to be with you today. We're going to cover some really great topics in this 30 minutes Zoom call. We're going to go over, first and foremost, the 3 ways of making money in this new economy. We're going to go over the power of trading with margin, how to trade with Fibonacci's, and the emotional roller coaster of a trader. But before we jump into it, I just want to give a quick disclaimer. Trading foreign exchange, trading on margin, trading cryptocurrencies or any other asset carries a high level of risk and may not be suitable for all investors. Past performance is not indicative of future results. The high degree of leverage can work against you as well as for you. Before deciding to invest in foreign exchange, options, or cryptocurrency, you should carefully consider your investment objectives, level of experience, and risk appetite. The possibility exists that you could sustain a loss of some or all of your initial investment, and therefore you should not invest money that you cannot afford to lose. You should be aware of all the risks associated with foreign exchange, option trading, trading on margin, and crypto. And seek advice from an independent financial advisor if you have any doubts. Any statements regarding income, whether expressed or implied, do not represent a guarantee. No representation is being made that any account will or is likely to achieve profits or losses similar in this video and in my trading account. Any opinions, news research, an analyst, or other information contained in this video is provided as general market commentary and is for education purpose only, and do not constitute investment advice or solicitation to buy or sell any option, any particular stock, any foreign exchange, or any cryptocurrency. The Forex trader, Jeremy Wilson, will not accept the liability for any loss or damage, including, without limitation, any loss of profit which may arise directly or indirectly from use or reliance on such information laid out in this Zoom call. All right, that being said, let's get right into it. So what I appreciate is that right now there are opportunities that abound everywhere. And the great thing is that it's not just for the rich, it's for all of us. So during this pandemic, we realize that jobs are being lost that might not ever come back again. And people are sitting on the sidelines. And most people are scared or they're misinformed and don't know where to go. So the purpose of this Zoom is to really expose 3 opportunities that exist for you right now and to not only show you where they are, but how to enter. So the first one that I enjoy and that I'm really proud of is trading with options. So before we get into it, what an option is, so we are very clear. An option is you're buying a contract to either buy or sell a stock at a strike point. So unlike buying and selling stocks, you do not own the stock, but you control a certain amount for a time period. And that's the great thing about options, is that you can buy an option for something that you believe is going up, or you can buy an option for something you believe is going down. And that's short in the market or going long in the market. And another great thing about options is that the entry price is a third usually of the cost of the stock itself. So if you're limited in the amount of money that you have, and you want to buy Disney, for example, but you can't afford it at $110 a share, or you can only buy 10 shares if you have $1,000 or less, actually 9, but you wanted to control it, you can find ways to get in at Disney using a contract, an option contract for a strike price that that is cheaper and can extend up to a year. So when the contract is about to expire, you can either execute on the contract and buy it, or you can sell it to someone else who's interested in buying it. So it's a great way to make money. Now, what I'm going to do, because I am a person who I don't want to just share with you a theory. I want to share with you what I'm currently doing. So recently, I've been talking a lot about Delta because Delta has gone from $60 a share to as low as $18. Now, this is all because of what's going on with the pandemic and no one's traveling. But Delta is a stable in the industry, right? It has a gold standard as far as service, in my opinion. And I've noticed that when Delta went down to its low, that's when it made a bounce and found support. So the high again was 60, the low was 19. So it's been in that range. But if you were able to buy Delta and hold on to or control a certain amount of contracts, let's say for a year or two, and Delta just went from $18 back up to 60, and you controlled 1,000 of those shares, well, just by the numbers itself, you would be able to make $40,000 if it just went up, if you owned all that. But the awesome thing about options is that not only do you get it at a discount, but there's a component of time and price. So the further away the time is, the less valuable that contract is. But the closer you get to expiration, the more valuable that contract becomes. So I'm going to share my screen with you, and I'm going to tell you exactly what I did and why I did it, and how, if you wanted to, you could do the same thing. So let's go to share screen. All right. So this is my trade account, right? What you're seeing here is what I did. So I'm going to go to my options, or I'll just go to my positions. And this is full disclosure. So I went ahead and I bought an option on Delta, right? I bought it at $6.75 a share, or $675 a contract. So that allows me to control 100 shares. I bought 10 contracts, which is pretty awesome. And the reason I like it is because when I bought it for 400 days out, or you see it expires in 399 days. Now, here's the thing. When it comes to it, I can exercise this option and buy those stocks at the lower price, or I could just sell it to someone else who wants to do it, right? So I have plenty of time. And you can see just the 1-day result. I'm actually currently up in this right now, $54. The price is going down. But if you search the price point, and I'll try to do that. Let's see if I can go to trade. Let's go to trade. And we're going to search Delta. Maybe. There we go. Oh, I'll go to Delta. So we're looking at it. And right now, It's at 1927. This is major support, guys. So you see it's been on a downtrend. I'm just going to share a little bit about a Fibonacci. So you have the A, you have the B, the C, and then the down, right? So A, B, C, D. Anyway, we'll get more into the Fibonacci's in a minute. But the reason I like this because today's low was 1862. The high was 1967. So we know that it's finding support right here. And since I have a 400-day contract, it has plenty of room to move back to the upside. So for those of you who are interested, this is a great opportunity to get into options. And you can do that with Delta, you can do that with Disney, you can do that with the cruise lines. Anything, in my opinion, that was affected by the coronavirus of no fault of its own and will potentially come back, that's what I would invest in. It's like, you know, the way to go. The next thing I want to share with you is crypto, right? Now, because we are on a Zoom call, I cannot log into my crypto account because I can't fog off the screen with all my pertinent details. But what I'm going to do is I'm going to share with you an account that I found. It's an old account where I was trading on margin. And not only am I going to show you the account, but we're going to do a little margin trading so you can get the gist of it. So this is Prime XBT, all right? Now, the reason I like this is because this platform, and I'm not recommending for anyone, but this platform is not governed by any one particular government. And all the trades are used with Bitcoin. So you have to fund your account with Bitcoin and they pay you back in Bitcoin. So what I'm looking at here, and you can trade 100 times margin. So let me show you what I'm looking at. And we're going to do a little bit of Fibonacci's. So we're going to start here. Now this is a 5-minute chart. The reason I'm using a 5-minute chart with Bitcoin is because Bitcoin is particularly volatile. So if you're looking at an hour chart or anything beyond that, you can lose your money very quickly, or you can make a lot of money. So if we look here, and I did a Fibonacci, you can see the A. So this is the start of the A. So I'm going to actually use some tools so you guys can see what I'm talking about. So right here. Wrong chart, sorry. All right, so we're gonna add a down arrow right here. So this is the start of our downward motion. So you have the A, then it comes down. Now we're gonna show you the B. So this is how you can trade with Fibonacci's, right? So I'm showing you a really ninja strategy, all right? So here, so you have the A of your sequence, the B. So this is one leg, A, B. Now you're in your C. And your C right here is usually just consolidation. So it might go up a third or even half, but it's a consolidation, right? And now you're going to find your D extension. And your D extension is right here. So you see how this thing is going as we speak? See that? It's crazy. So let me, I mean, this is awesome because like you're seeing it drop $100 right in front of you as I called out this trade. So that's pretty cool. So if I wanted to, I would sell this and I only have $8 in here. Here's the power of margin. I can trade up to 100 times. So I'm just going to put in 0, 5. I don't even know. Yeah, we'll do that. And send the order. Now, I wouldn't usually trade when it's moving like this already, but you see it was filled. So that trade literally only cost me what, $3? And so you can see, let's just see what this does together. Again, I would have waited, but because this is live, why not? So you see the power of trading, one with Fibonacci's and also trading with margin, is that I can do more with less. And that's the same thing with options. You can do more with less. So let's see if this thing will give me some profits, or will it knock me out? Now, I could have also put my stop loss in, but I didn't, for the reason that this is live. So we'll come back to this. We don't need to harp on it. The next thing that I want to do, since I covered the power of trading on margin and Fibonacci's together, I just want to make sure you guys see it. So let's go here to the Dow Jones. So the Dow Jones, what is it doing? Well, it's in an uptrend. So let's write this out together. And you can actually trade the Dow Jones on this platform. So just a thought. Not saying to do it, I'm just saying that you could. So it's on an uptrend. So here's your A. Now, how do you find your B? So the way that you find your B is that you're looking for a top arrow with two candlesticks down on the left and 2 candlesticks down on the right. And that is a confirmation that that is your completion of that particular leg. Right? So hope you guys are writing this down, but if you're not, I will share this recording. So your A, your B, your C, right? So how do I know that this is the C? So again, I got 2 candles to the left that are above this candle, 2 candles to the right that are above this candle. So that tells me that this is a C. Now remember, this is on a 5-minute chart. The great thing about this is that Fibonacci's can be found in any time frame. So we're just using this as a demonstration. So let's see. So I'm going to put in an up arrow right here. So in this one, I have the A, the B, the C, and the D extension. You see that? And then it starts all over again. Now, how do you trade it? Which is a question that most people have. Well, simple. You can trade the A to the B. You never, oh guys, look, I'm made 30 cents. So you trade the A to the B. You never trade the retracement. The reason why you don't trade the retracement is because it could be a shallow retracement, a deep retracement. We just don't know. So A to the B, and then you trade C to the D extension, which will be here. This is the top of the D extension, okay? Then it will go, then it will cycle back, A, B, C, and we're looking for another D. All right, so that's pretty awesome. And we'll come back and see where this goes. I'm gonna stop my screen for a second. And what I want you to do right now is post in the chat or give me a thumbs up if you are understanding what I just said, if it was too fast and we need to review. All right, great. I appreciate it. So let's now go on to the most important topic for today. And that really is the emotional roller coaster of a trader. So I think we all can agree that our emotions control our actions. And emotions carry such strong energy. So what some people believe, and I believe this, is wherever your focus goes, energy flows. And that's the same thing with your emotions. When you're focused on something, you have an emotional attachment. And therefore, when you're trading, because we're trading with money, which carries in itself an emotional attachment, if it goes up, we're elated. If it goes down, we're dejected. Our countenance fall. And we make rash decisions on emotions and not information. So in order to be a successful trader, we have to learn to disassociate ourselves from our emotions, disconnect from our emotions so that we can trade our strategy appropriately. And that's why when we're having these conversations, I really don't talk about dollars. I talk more in the lines of pips, because pips have less of an less of an emotional connection than dollars. If I tell you that I'm down 10 pips, okay. But if I tell you that each of those pips have a value of $50 and I'm down $500, oh my God, some people might say that's a lot. So 10 pips, $500 makes a big difference. So what I want to do now is go into the power of emotions and how to use our emotions as a call to action when trading. So guys, I want to tell you, look, you see all these notes? These are notes that I take. And one thing I'm going to recommend to you as you start your trading venture, or if you're already trading, is to have a journal. So every day you can write down not only why you made that trade, but how you felt during that trade, because those emotions are signals for us to change our, it's a call to action. It doesn't necessarily mean change, but it's a call to action. So let's get into this. What we want to do is uh, use our emotions in a way that serves us. So any emotion is a call to action, or it's an internal conversation. So we need to first understand how can that be. So most of the time, our mind thought and our behaviors are one for survival. So most of the time, we're looking at things that could go wrong instead of things that could go right. So this is very important to understand when trading, because if you put a trade in and the first thing you're looking for is, well, what could go wrong? Or you see that maybe you're losing 10 pips and like, oh, I made the wrong decision. Oh my goodness, because that's how our mind thinks, instead of realizing that it's just a retracement, or it's just because every single market moves in waves. Then we'll get in and we'll get out, we'll get in and we'll get out, and it will be frustrating, and you won't make any money at all. You'll just lose money. So well, let's go over some of the emotions. So one of the emotions that you can feel when trading is uncomfortable. And what I want you to let this emotion tell you is that it means that you need to make a change. So that could be one, that you're over leveraged. That two, you're not confident in your trading strategy. It can be a number of things. So when you're trading, that's why you never want to risk more than what you can lose, right? So uncomfortable is a call to action that a change is needed. The next emotion that you can feel in trading is fear. And what fear is telling you it's giving you a call to action that you need to just stop trading. Really. When you're fearful of the trade, is telling you that you're not ready. So I would go back and I would paper trade, or I would reduce my risk, go to a lower pit value, or put in some other mechanics to help me feel more secure about my trading strategy. The the next fear is hurt. And a hurt signal comes in when maybe you've had a losing trade or a losing streak of trades, and you feel hurt, and you feel, you know like, man, I can't do this. And what this signal is telling you that again, you need to reevaluate what you're doing and gain clarity into why. Because if you lack clarity in why you're doing something, then honestly, this becomes, gambling. It's just a chance. But once you define why you're doing it and you have clarity, then it will take that hurt feeling away, because we know as traders that you're not going to win 100% of the time, and you're not going to lose 100% of the time. So, so that's what the emotion of hurt does. Next is anger. Now, this is a good one. This is a good one because I've got caught up in this. I have lost a trade before, or let me be even clearer. I have put in a stop loss. So a stop loss is, if it reaches a certain level, that automatically close out your trade. And I put in stop losses, and just for it to hit my stop loss and then go back in the direction I was trading, and I was so angry. Oh, and then I found myself revenge trading. Now, a revenge trade is when you made a loss and you're like, I'm going to get it back. And what you inherently do, you increase your risk, and you don't follow a strategy. So you increase your risk and then you jump right back in. And then what happens, because the market is picking on you, it's really not, but that's how it feels. Then it will go right back down, and you're like, oh, it's doing it again. Then you get so confused, you jump out of that trade again. So it's a lose-lose, because you're not controlling your emotions. So that's really, if you're angry in trading, the call to action is to stop trading for that day. Not to stop trading, but just stop trading for that day. The next emotion that I want to cover is frustration. And frustration, uh, it really it really nibbles at you when you have your up and down. So you win a trade, you lose a trade, you win a trade, you lose a trade. Now, what happens when you're frustrated is this. You will take off your stop loss, okay? Or this is what I've done. I'm just being honest with you. I've taken off my stop loss, and then I'll trade, and I will get a little bit of profit and close it out. But then when it goes against me, I will take a lot of risk because I'm frustrated and I just want it to work out. So this happens to every trader, but that's why it's so important to really journal and write down your emotional state in trading, so you can recognize where you are, what you're doing, and make adjustments. So when I'm frustrated, what that is a call to action for me to do is to close the trade and wait for the right indication to re-enter. So frustration and anger sort of go hand in hand. But these are really call to actions. It's telling you that, you know, take a break, relax, go swimming, go golfing, do something, but stop trading. Just stop. All right. Um, I'm going to share one more with you. I think we have time. And the last one is disappointment. Disappointment. Now, as you go through your trading venture, you're going to come to realize that there are tons of trading strategies. And there's people who have been trading for years, and they offer good advice. I'm going to share with you a story. I was trading, and I'm in this group with all these other traders, and I'm trading the Aussie USD, and I know my strategy is right on. I know it is, and I feel confident. And I get to talking to these guys, and this guy says, "Oh, did you see this head and shoulder formation?" And this and I was like, "No." And he said, "Oh no, look right here." Oh no, it wasn't a head and shoulders. It was a crab pattern. And there's tons of patterns, so don't get frustrated if you don't understand what a crab pattern looks like. It looks like an M. And he says, "So you see this right here?" I said, "Yeah." He says, "So if you're going long, you're gonna get slaughtered. This thing is going down, baby." And I was like, you know what? This guy has been trading for 20 years. I've been trading for 10. You know, maybe he's right. So I took his advice. I got off the trade, and I started shorting it. Oh, and it went up. Oh, I was hurt to my heart. I was so disappointed. And I wasn't disappointed that it went up. I was disappointed in myself for not trusting my strategy. So what disappointment does, what that call to action is that it's a call to action that um, that you need to, one, focus on your strategy. You need to reevaluate what you're doing, and you need to stop trading and wait for the next session or day. And you need to remember that you're not going to win them all. But the more you do something and the more takeaways you can take from it, from those losses, the better that you'll get. Uh, I'm going to leave you with this one quote, and I think this is relevant, and is a quote from Bruce Lee, who said, "I do not fear the man who knows 1,000 kicks and practice each one time, but I fear the man that knows one kick and practice it 1,000 times." So as you become more familiar and you develop your own strategy, my thought and my suggestion to you is to own it and to enhance it, but own it and stick to that strategy. We can always make adjustments as the market changes, but know that one. And by knowing that and mastering that strategy, that's how you become a successful trader. And that's how you'll be able to control the emotions that are inherent in trading. So guys, I hope that you got a ton of value from this. I really wanted to offer you a lot of value and share with you some stuff. Hey, just real quick, if you want, let's see what my BTC is doing, huh? So it's still down 58 cents, but I'm just gonna hold it because I trust that I am in A, B, C, D extension to the downside. So why not? And as you see, I'm right. I am right, but I don't want to toot my own horn. All righty, guys, this is Jeremy Wilson, the Forex Trader. Thank you so much. I appreciate your time. Have a great day and stay safe out there.